Welcome back. You're still watching The Money Show on ET Now, and in our last segment we'll tell you some top trends that are emerging as far as the realty space is concerned. If you could pull up the graphics as well, as far as September quarter goes, realty price trends, well, for Ahmedabad it's been a 3% change, for Bengaluru 4%, Chennai was down 1%, Hyderabad has soared the most with 15% gains coming in, Kolkata 4% again, Mumbai 3%, Noida almost flat, just a meager 1% change. Price range of new launches with respect to the percentage of new launches. Over 1 crore was 13%, 75 to 1 crore, between that range was 9%, 45 to 75 lakh was 36, 25 to 45 lakh was at 25%, and lastly below 25 lakhs has seen a 17% change. Let's give you a breakdown from the realty trends as well, especially when it comes to the urban areas. Q2 FY19 saw a degrowth of about 18%. Q3 of FY19 saw a jump up of 22%. Q4 was once again down 23%. Q1 was up 15% and Q2 was up a solid 32%. So this has been the trend as far as urban markets are concerned, as far as the new launches are concerned. Let me give you some more data on this one. Q2 FY19 in terms of price trend saw a 10% growth. Actually, it's a 10% degrowth. Okay, we'll have to change it. Q3 saw a 10% degrowth. Q4 was down 5%. Q1 was also down 1%. And Q2 was completely flat, it was completely unchanged. Let's talk more about realty with Dhruv Agarwala. He's the Group CEO of PropTiger. Dhruv, hi, welcome aboard. While we know the sorry state of affairs when it comes to real estate sales, inventory has finally started to come down. Can you tell us what is your observation on that front?
Yeah, so I think what we've seen is that, in the month of September this year, I think inventory came down by about 13% year on year, and where it stands today is it almost at a 3-year low. I think what's happening is that developers are focused more on sales and on completing the existing projects as opposed to making new launches. Hence, because launches have come down faster than what sales have come down, we've seen a decline in inventories.
Okay, so if launches are reducing, inventory is also reducing, does that mean that finally the glut that we've been seeing in the real estate market will reduce and it will provide some amount of support when it comes to prices?
Look, I think this was required. As you yourself observed, there was a glut in the market, but there was a huge supply of product which was not selling. And if that was the case, I think it was bad for the overall health of the sector. The fact is that with developers now actively, selling, focusing on actively selling projects as opposed to launching, and also consumers, wanting to buy ready to move in units, and a large number of those units are coming up for delivery, over the next, 8 to 12 months. I think this glut which you speak about, will come down. As a result of which, I think there will be a support, in terms of prices. We don't expect prices to fall anytime soon going forward.
Okay, let's also now talk a little bit about pricing. Can you tell us what is the trend seen across the top 6 cities?
As far as pricing is concerned, prices have over the last couple of years remained, fairly stable across most geographies. I think if you look at all the cities, prices have either come down or gone up, but within a very narrow band of about 1 or 2%, which essentially means that they've stayed stable. I think Hyderabad has been the only exception in the last 1 year where prices have gone up by 15%. So prices have more or less remained stable. But this is actually in nominal terms. If you look at the fact that there is inflation annually, and prices remain stagnant, in effective real terms prices have come down, and also with interest rates being at multi-year lows, I think this is a very, very good time for home buyers, because I don't think prices will come down further for the reasons we just discussed, and interest rates are at an all-time, not an all-time, but at least at a multi-year low. And that's really helpful, for the sector and home buyers going forward.
So if prices are just stable or say stagnant, does it make sense to invest surplus funds in real estate as an investment bet?
Look, I think the kind of returns we saw in real estate, especially residential real estate, which is what we primarily deal with, between let's say a 2005 and a 2010. I think those kind of returns are unlikely to be seen in the near future. So for investors who are looking for those type of returns, I think it's I think going to be a disappointment. I think anytime in the near future. For people looking to diversify away from other asset classes and who do not own any real estate, other than their primary home, as I said, depending on what their overall asset distribution, asset allocation is, they could look at real estate. But for home buyers who are looking to buy a home to live in, as I said, it's a great time, just given the fact that one, interest rates at a multi-year low, prices have been stable in nominal terms and in fact gone down, as I said, in real terms, and also the fact that developers are focusing on completing projects, as a result of which, and many of these units which are going to get completed will be delivered over the next 8 to 10 months. That's a great time because you can actually buy a ready to move in unit without the associated completion risk, and that something might go wrong. So I think from all these perspectives, it's a great time for the end home buyer.
There are ways in which buyers can buy a home below the circle price. Can you share a bit about that as well? Because we have you on the show already, so if you could share those insights with our viewers.
Sure, I think it's an interesting question you've asked. I think there are neighborhoods, probably across cities, where you can now find homes below circle rate. I think the way the current law is written, if a transaction takes place below the circle rate, you need to get the registration done at the circle rate. The buyer who gets a benefit, notional benefit by getting a property which is lower than a circle rate, actually has to pay income tax on that notional gain, and even the seller has to record capital gains on the circle rate value as opposed to the actual market value, and pay a tax on that. However, if you get a valuation report done before you consummate the transaction, and use that valuation report to have a discussion with the sub-registrar, then you might actually be able to get the property registered at the actual market price as opposed to the circle rate. This process does take some time, but it saves you the grief of paying that extra tax. Similarly, I think once you've got the registration done at the market price and you have the valuation report with you, I think if you inform the tax authorities about that along with the valuation report, I think you would be able to save taxes on this sort of notional gain, both for the buyer as well as the seller. But again, this is something which is very discretionary, in the sort of realm of the sub-registrar and the tax authority. So it's best that one gets the valuation report done and very transparently, engage with the registrar as well as the tax authorities to ensure that if there is a relief, it's known to you upfront. But do plan to pay taxes, on the gain if you're a seller, and even for you as a buyer, be prepared to pay that extra tax on the notional gain as you're figuring out your budgets and the cash you're putting aside for the transaction.